Alright, for this video we want to go over the earned income credit for 2023. And in this video we want to go through an example where the EIC is disallowed because the taxpayer has too much investment income. So we'll go through the publication 596 and all the worksheets. We do have the taxpayer's 2023 Form 1040 here. So we'll have a look at his earned income, his investment income, and then the EIC worksheets and see how his investment income, unfortunately, is too high for the year, and so that makes it ineligible for the EIC credit. So I've got those two pieces, and then one slide here covering some background on this investment income limitation, and then the fact pattern itself. So when we talk about the EIC, generally speaking here, there's a couple of things to factor in, right? So certainly your earned income, you have to have at least some earned income during the year. And then we also look at your modified AGI because the EIC is calculated on your earned income, your overall AGI, and then you generally take the lesser of the two values. The number of qualifying children you have certainly is a factor because that would increase the EIC amount. You don't need a qualifying child to claim the EIC, but if you do have children, it definitely increases the amount of the credit. Now, the issue with the investment income is if the taxpayer has what is considered disqualified income, so in other words, investment income, over $11,000 for this year, the credit's completely disallowed. And so you can find that guidance in not only the publication 596, but in the tax code, section 32I1, it has that disallowance for disqualified income. So what is disqualified income? It really is your investment income and then income from passive activities, right? So it would include things like interest, dividends, rents, royalties, capital gains. And then if you have investments in an S Corp or a partnership, so you're getting a K1, and the ordinary business income passing on to you is passive activity income to you. If it's passive income, then it's going to be included in this disqualified income computation. So if we look at our example here, let's say we have John taxpayer. He's a single parent and he's filing as a head of household for the 2023 year. Now in 2023, he lost his job and he wasn't able to secure new employment. Now the wages he was paid leading up to losing that job were $18,950 for the year, and he did get that reported to him on a W-2. Now, because he wasn't able to find new employment and he was low on cash, he decided to sell some stock, right? So he sold some stock and realized a long-term capital gain. And so his investment income for the year, for the whole period, he had $50 of interest income, and the capital gain on the sale of the stock was $12,008. Now, he does have one son, Alex, who's 8 years old and lives within the whole year. And so Alex is a qualifying child for purposes of the EIC. So if we have a look at his return here, try to get a sense of what these numbers look like. So we've got page 1 of his 1040. We've got his earned income up here, the W-2 wages, $18,950. And then we've got his interest income and then the capital gains on the sale of the stock, right? So his earned income and his total AGI, generally that would put him well within the ranges to be able to get an earned income credit amount. But what we'll find is the investment income excess amounts basically make him ineligible for this credit. So if we have a look at the earned income credit worksheet, there's two worksheets to keep in mind, right? So we have the earned income credit worksheet, and then the other worksheet is the investment income worksheet for earned income credits. So most of the time, taxpayers will just be working with this worksheet here, right? So the way this worksheet works is you calculate the credit on your earned income, and then you calculate the credit on your overall AGI, and then you take the lesser of the two amounts. So we can see up here, lines 1 through 5, we have John's earned income, which is just those W-2 wages. So in most cases, he would just use the $18,950. He would go to the publication, and then he would look up the tables for the earned income credit table, and then factor in whatever his earned income credit amount is. So if we jump down to the earned income credit tables, Let's scroll on through here. Okay, so we've got the 2023 earned income credit tables. So for most taxpayers, they would just look up what their earned income credit is and then use that as the starting point. So in John's case here, his earned income is $18,950. So if that was the only income he didn't have any of this investment income, he would find the amount here, $18,950. So the initial credit amount would be $3,995 because he's filing head of household and has one qualifying child. But in this case, because he has the investment income issue, it prevents him from calculating an EIC amount altogether. So if we look at the investment income for earned income credit worksheet, we can see he's entered the $50 in interest income that he has. He's got his net capital gain income of $12,008. And so his total investment income down here on line 11 is $12,058. So question 12, the last question on the worksheet, asks, is this amount on line 11 more than the $11,000 figure? And the answer is yes, right? And so yes, so he cannot take the tax credit. If it was less, then yeah, you can continue on with a calculation because you don't meet that threshold. So in John's case here, right, as we looked up on the publication, right, the EIC amount based on his earned income was $3,995. The EIC amount on his total AGI, which is $31,008, would be $2,482. So if John didn't have any investment income and he was just using these amounts, the EIC amount would be the lesser of these two. So he would actually be able to claim $2,482 based on that AGI of $31,008. But because his investment income exceeds the $11,000, his EIC amount is just flat out going to be zero, right? So he's not going to get any EIC amount, even though his income is still it's still low, right? I mean, it's $31,000 in AGI is tough. I mean, that's a low income for a single person with a child. But because this investment income, he just had too large of a gain on the sale of the stock, it makes him ineligible for the credit. So what's the planning opportunity here? Well, what if John, he still sold the stock, but he just happened to sell enough to where the total investment income fell below that threshold, right? So let's say, for example, he sold $1,500 less of the stock. So if we're looking at his 8949 here, where he reported the long-term sale of the shares, instead of having total sale proceeds of $17,608 and that amount of cost basis, what if he didn't sell as much, and so the gain here was $1,500 less than the $12,008 figure? Well, if he sold $1,500 less and then the gain on the stock was only $10,508, so his investment income now is $10,508 plus the $50 of interest, so $10,558 of investment income, which is under the $11,000. He's now eligible for the EIC because he hasn't hit that $11K plus mark, and his AGI would drop to $29,508. So when John would complete his EIC worksheet here, he could look up the EIC amount for the earned income and then now enter his adjusted AGI, the $29,000 and change figure, and then look up the EIC amount on that $29K AGI. So AGI of $29,508. If we went back to the worksheet here, $29,508. Let's find that amount here. So $29,500 to $29,550 is the range. So $29,508 would put him at $2,722 with one qualifying child for that EIC amount. And so, he definitely misses out. If he had just sold a little bit less, he would have qualified for this large amount of the EIC credit. So this is kind of the beauty of hindsight, but also, again, a planning opportunity if you find yourself in this position, right? If you're in this position where you otherwise would qualify for the EIC, but you're going to have some large capital gains or other investment income during the year, maybe don't sell as much stock, or if you have capital losses, realize those losses and offset the gains try to do what you can to get your income under the 11,000, your investment income, that is, under the 11,000 figure, and that'll make sure that you're now eligible for the EIC. All right, so that covers it for this video. I hope that was helpful. And as always, I look forward to seeing you again on the next video. Thank you.